What if I told you there are at least 5 stocks you could buy today and never worry about selling? Companies so deeply embedded in human nature and society that they will likely be around and profitable decades from now. As Warren Buffett once said, our favorite holding period is forever. And Jeff Bezos has talked about the importance of building a business around things that are not going to change. So today we are not talking about the latest AI hype or risky turnarounds. We are talking about businesses that tap into something much more powerful: unchanging human behavior. These are companies that have built moats so wide and deep that they are practically impossible to disrupt. Oh, and this video is sponsored by a longtime friend of the channel, Forecaster, but more on them later. So let's dive into 5 stocks you can buy and hold forever. And make sure to stick around till the end, because I will also share a bonus company that might be the ultimate forever stock. Let's start with the most obvious one, Coca-Cola. Now, you might be thinking, really? A sugar drink company in 2025? But here's the thing about Coca-Cola that most people miss. This isn't just about the product. It's about what the brand represents in our minds. For over 130 years, Coca-Cola has embedded itself as a symbol of fun, happiness, and good times. Think about it. When you see the red and white logo, what comes to mind? Probably Christmas commercials, sharing a Coke with friends, or celebrating special moments. That's not marketing. That's psychology. And human psychology doesn't really change. Coca-Cola has created something money can't buy, a permanent place in our collective consciousness. They have survived 2 world wars, the Great Depression, countless health scares, and every food trend imaginable. Why? Because they are not selling a drink. They are selling an emotion. Even if the world goes completely health conscious tomorrow, Coca-Cola has the distribution network and brand power to adapt. They are already doing it with their portfolio of water, teas, and low-calorie options. So let's go to Forecaster and their qualitative scorecard for Coca-Cola. We have here 10 questions that basically allow us to understand the strengths and weaknesses of any company. So let's go through them. Would it be hard to copy this company even if a competitor had unlimited money? That is a check. Do customers speak positively about the company and recommend its product? Definitely a check. Has the company survived past crises and shown resilience? Yes, it did. Does the company spend more on R&D than on marketing? That is an X. Do employees stay at the company for many years? That, on the other hand, is a check. What would happen if the CEO left tomorrow? Is there a clear succession plan? We have a check here. Does most of the revenue come from recurring sources or long-term contracts? Another check. Does the company have pricing power? Can it raise prices without losing customers? It definitely has a lot of pricing power. Have revenue and profits grown in the past 5 years? Is the growth steady or exponential? That is a check. And the final question, does the company have room to grow in the future? Is it in a growing industry? Does it still have market share to gain? That is a check because of expansion in emerging markets, innovation in low sugar and functional beverages, and e-commerce initiatives. Okay, let's discover the second company on our list. It is Texas Pacific Land Corporation, and this one is as simple as it gets. They own land, lots of it, about 880,000 acres in West Texas to be exact. And here is the beautiful thing about land. They are not making any more of it. For decades, TPL made most of their money from oil and gas royalties. But here's where it gets interesting. They are not just an oil play anymore. They are pivoting to water sourcing, water treatment, and solar power development. The thesis is simple. Land will always be needed, whether it is for energy production, water access, or future technologies we haven't even thought of yet. TPL owns the real estate in one of the most economically important regions in America. So now let's go to Forecaster and their qualitative scorecard for Texas Pacific Land Corporation. So we see a first X at question number 2. Do customers speak positively about the company and recommend its product? But it is not really an X because as royalties and land management firm, Texas Pacific Land has no traditional customers or public product reviews. Then we get another X at question number 4. Does the company spend more on R&D than on marketing? But again, it is not a clear answer because operating expenses reflect land management and legal costs rather than R&D or marketing. Neither line item is material in the filings. And the final X is at question 6. What would happen if the CEO left tomorrow? Is there a clear succession plan? That is a first really meaningful X, a lack of succession plan. Okay, let's take a look at our third company. Philip Morris International. Now, this one might surprise you. And if you are thinking cigarettes are dying, smoking rates are declining, this industry is finished, then you are probably missing the bigger picture. Philip Morris isn't just a cigarette company anymore. They are an addiction management company. And humans have been seeking pleasure and stress relief for thousands of years. That's not changing anytime soon. The genius of Philip Morris is that they are leading the transition away from traditional cigarettes. Their IQOS heated tobacco products are already available in over 70 markets. They are developing reduced risk products that satisfy the same human needs, but with potentially less harm. Think about it. People didn't stop drinking coffee when they invented decaf. They didn't stop eating sugar when they created artificial sweeteners. The underlying human desire remains the same, but the delivery method evolves. Philip Morris is betting that people will always want nicotine, but they will want it in a safer form. And they are using their massive cash flows from trading cigarettes to fund this transition. They have the distribution networks, the regulatory expertise, and the financial resources to dominate this evolution. Human nature doesn't change easily. The desire for stress relief and pleasure is hardwired into us. Philip Morris is just changing how they deliver it. Let's go to Forecaster and see the qualitative scorecard for this company. and it has only 1x. Thus, the company spend more on R&D than on marketing. We can read that annual marketing and promotional expenses, $7.5 billion, significantly exceed R&D investments, $0.8 billion, reflecting an emphasis on brand building over basic research. Other than that, we can see only checks. Visa might be the most unavoidable business on this list. As long as people buy things, there will be transactions. And as long as there are transactions, someone needs to facilitate them. Visa has built such a dominant position in this space that they are practically part of the infrastructure of the global economy. Here is what makes Visa so special. They don't lend money. They don't take credit risk. They don't hold inventory. They just process transactions and take a tiny cut of each one. And the beautiful thing is, Visa adapts to whatever form money takes. Credit cards, debit cards, digital wallets, cryptocurrency, it doesn't matter. Visa's network can handle it all. When Apple Pay launched, who processed those transactions? Visa. They've spent decades building relationships with banks, merchants, and governments worldwide. That network effect is almost impossible to replicate. Even if someone wanted to compete with Visa, or MasterCard for that matter, they would need to convince millions of merchants and billions of consumers to switch at the same time. Good luck with that. The trend toward a cashless society only makes Visa stronger. Every transaction that moves from cash to digital is a new revenue opportunity for them. Let's visit Forecaster website and see Visa's scorecard. And just as it is with other companies on our list, question number 4 is an X. Marketing and network development expenses, including sponsorships, regularly exceed research and development outlays. Innovation investments focus primarily on partnerships and acquisitions rather than large in-house R&D budgets. Before we move on to our 5th stock, I have a really nice exclusive offer for you. If you want to analyze thousands of companies using Forecaster, then by clicking my affiliate link in the description and then entering a discount code BOLD10 at the checkout, you can get 10% off your purchase. And you will be also supporting this channel at the same time. So thank you Forecaster for sponsoring this video and continuing to support this channel and its mission. It really means a lot. Now let's move on to our 5th stock. Finally, let's talk about Hermès, the ultimate luxury play. Throughout history, there's always been a group of people who want to stand out, who want to feel and look better than everyone else. Luxury isn't just about having nice things. It's about status, identity, and belonging to an exclusive club. Hermès has mastered this like no other company. Some of their bags have waiting lists measured in years, not weeks. Some of their products actually appreciate in value over time. They've created artificial scarcity more powerful than any other brand. But here's what makes Hermès special. They control every aspect of their business. They own their leather suppliers. They train their craftsmen for years. And they own all of the stores. This isn't just a luxury brand. it's a luxury ecosystem. And luxury is embedded in human nature. Even in economic downturns, the ultra-wealthy keep spending on status symbols. In fact, sometimes they spend more because luxury becomes even more exclusive when fewer people can afford it. Hermes has been doing this for over 180 years. They've survived world wars, revolutions, and countless economic crises. Through it all, there have always been people willing to pay extraordinary prices for extraordinary products. There aren't many symbols of luxury more obvious than Hermes. When you see the orange box, you know exactly what it represents. And when we look at the qualitative scorecard of Hermes, we see an X for question 4. And it shouldn't be a surprise that marketing and brand building investments far exceed formal research and development expenditures. But we also see another X at question number 7. Does most of the revenue come from recurring sources or long-term contracts? And the business model here is very different. But you could argue that having waiting lists that last many years is a sort of a long-term contract. And before we end, let's take a look at our bonus company. Berkshire Hathaway. Why include Berkshire but not in the top 5? Well, I don't really look at it as one company. It's like buying an ETF of companies that the greatest investor of all time believes are worth owning. Warren Buffett has spent over 50 years building this collection of businesses. Insurance companies, railroads, utilities, consumer brands. Berkshire is essentially a diversified portfolio of wonderful companies. The challenge with analyzing Berkshire is that it's so many businesses in one. It's like trying to analyze the entire stock market in a single company. But that's also what makes it perfect for buy and hold forever strategy. Even if one business struggles, Berkshire has dozens of others to fall back on. Plus, they are sitting on hundreds of billions in cash, waiting for the next great opportunity. When you buy Berkshire, you are not just buying a company. You are buying Warren Buffett's judgment and Charlie Munger's wisdom, distilled into a single stock. So there you have it. 5 stocks you can buy and hold forever, plus one bonus pick. These aren't growth stocks that might triple in a year. These are steady, predictable businesses built on foundations that don't change. If we buy them and hold them, the compound interest should do all the work. Remember, the best time to plant a tree was 20 years ago. The second best time is today. If you enjoyed this video, make sure to press the like button and to check out my video about 5 incredible companies with no debt. Thanks for watching and see you in the next one.